All of you are good to go? Yes. Door Limited is considering an investment of 4 lakhs. This investment is expected to generate substantial cash flow. So cash outflow is 4 lakhs. Over the next 5 years. Unfortunately, the annual cash flow from this investment is uncertain. But the following probability distribution has been established. So the project will be running for 5 years. 1 to 5 years. The probability is 50,000, 1 lakh, 1 lakh 50,000. Probability is 0.3, 0.3, 0.4. At the end of its 5th year life, the investment is expected to have a residual value of 40,000. So this will be an additional cash flow. The cost of capital is 5% required. Calculate NPV under 3 different scenarios. Scenario 1, I am finding out the answers. Scenario 1, if cash flow from 1 to 5 years is 50,000. Also in 5th year, there will be a scrap value of 40,000 which will be coming in. I will be finding out present value at the rate of 5%. So this you can find it out by GT. I will have to use M plus 1 divided by 1.05 is equal to M plus 1, 2, 3, 4, 5. MRC multiplied by 50,000 is the 2,16,473. 2,16,473. And this 40,000 will be present value after 5 years. It is only 1 year cash flow, which is 5th year cash flow, divided by 1.05. 1, 2, 3, 4, 5. It will be 31,341. What will be present value of cash inflow will be total 2,16,473 plus 31,341, which is 247,814. 247,814 minus present value of cash outflow is 4 lakhs rupees. My NPV will be 247,814 minus 4 lakhs. 152,186. 152,186 negative. Which is the scenario 1. If my cash flow is 50,000 every year. Sir, there is a probability attached to it. Yes, but they are first telling me to find out scenario analysis. So as far as scenario analysis is concerned, first answer will be 152,186. Scenario 2. If 1 to 5th cash flow is 1 lakh rupees and at the end of 5th year I am getting 40,000 rupees. Present value of this will remain same, 31,341. Present value of this 1 lakh rupees. 1 divided by 1.05 is equal to M plus 1, 2, 3, 4, 5. MRC multiplied by 1 lakh. 432,947. 432,947. 432,947 plus 31,341. 464,288. 464,288 is present value of cash inflow minus present value of cash outflow will be 4 lakhs. I will be getting a positive NPV of 64,288 as far as the scenario 1 is concerned. Sorry, scenario 2 is concerned. Scenario 3. If 1 to 5th cash flow is 1,50,000 and 5th year I am getting scrap value which is 40,000 and present value of which also I am knowing 31,341. because the rate is remaining same, cash flow is remaining same, at the end of fifth year is remaining same. So I just need to find out 1,50,000 rupees. 1 divided by 1.05 is equal to m plus 1, 2, 3, 4, 5. MRC multiplied by 1,50,000. It is 6,49,421. 649,421. 649,421 plus 31,341. 680,762. 680,762 is present value of cash inflow minus present value of cash outflow is 4 lakh. So it will be 2,80,762 positive. This is what scenario analysis. If scenario 1 becomes true, what will be my NPV? If scenario 2 becomes true, what will be my NP? And if scenario 3 becomes 3, what will be my NPV? So then why probability is given? I'll tell you. All right. This is first point. Calculate the NPV under 3 different scenarios. So this is answer number 1. Calculate expected net present value. Now this is probability method, statistical method. This is our answer number 2. What is probability method? First I will be finding out cash flows. What can be my cash flows? 50,000, 1 lakh or 1,50,000. When from 1 to 5 years, what is the probability that my cash flow will be 50,000? Is 0.30. What is the probability that it will be 1 lakh? 0.30. And what is the probability it will be 1,50,000? 0. So this will be 15,000. This will be 30,000. And this will be 60,000. Total will be 1,05,000. Will be my cash flows. Yes. Expected cash flow after considering probability. Probability, first method. So this is expected cash flows. But for which year? 1 to 5 years. All the years the cash flow remains same. So I will be finding out present value. 1 to 5 years. My cash flow is 1,05,000. And in fifth year I am getting scrap value, which is 40,000. See, sometimes the students forgets and ask me this type of question. Sir, why in risk analysis we are not considering depreciation? We should consider depreciation if it is to be considered. See clearly what is written. It is written annual cash flow. They have directly given us cash flow. So we don't need to find out depreciation and other points. We can, but yes, scrap value of the machinery, they have not given any probability. We can directly take that as 40,000. So 1,05,000 discounted at 5%. This present value I am knowing 31,341. 1,05,000 I will be finding out present value. 1 divided by 1.05 is equal to m plus 1, 2, 3, 4, 5. MRC multiplied by 1,05,000. It is 4,54,595. 454,595. 454,595 plus 31,341. 485,936. Present value of cash inflow minus present value of cash outflow, 4 lakhs rupees. Probability plus, sorry, NPV plus 85,936. And in probability analysis, you have already considered your risk in cash flow. You are not giving 3 different answers. You are giving only one answer, which is plus 85,936. And you can write down over here, project should be accepted, which you cannot write down in scenario analysis. In scenario analysis, you are just giving the answer that this will be my expected cash flow, expected NPVs. All right, sir, if we have done scenario analysis, can we find out directly this answer? The answer is yes. Please understand, if you get this in examination, you can do it. But otherwise, you can find out by probability method under this. Find out by probability method. I have written so much. Otherwise, you can just find out expected cash flow, find out present value of cash inflow, present value of cash outflow. You will be getting this answer immediately. Or what I can do is, scenario 1 is having an NPV of negative 152, 186. Scenario 1, 182, 152, 186. Negative as NPV. Scenario 2 is having 64288, 64288 positive. And scenario 3 is having 2,80,762. What is the probability that this NPV will happen? 0.30. What is the probability that this NPV will happen? 0.30. And what is the probability that this NPV will happen? 0.40. You can just find out expected NPV. How to find out expected NPV? 152, 186 multiplied by 0.30 m minus is equal to 152, 186 multiplied by 0.30 is equal to m minus 64288 multiplied by 0.30 is equal to m plus 280,762 multiplied by 0.40 is equal to m plus MRC 85,935. Is nothing but expected NPV, and this two answer will be same. Whatever is the difference, 1 rupee is the difference, is the rounding of difference, but otherwise these two answers will be same. Here first I have found out expected cash flow and then found out present value. Here I have directly found out present value under different scenario and just found out expected net profit value from the NPV of different scenario. Both answers will be same. Please understand, this answer number 2 is probability method and answer number 1 is a scenario analysis. Advise Door Limited whether the investment is to be undertaken. So will I give advice based on scenario analysis or probability analysis? Probability analysis. Probability analysis, as NPV is 85,936. I could have found out by this method also. I should accept the project. This is answer number 3. Project should be accepted. As it is having positive NPV, it is earning more than your cost of capital, you should accept the project. This was C 6.3.